nightly business report.
Good evening. Tonight, deposits in Sri Lanka's banking industry increased significantly, rising from 10.4 trillion rupees in 2023 to 12.3 trillion by the end of 2024. As part of a nationwide effort to support 15,000 new business owners, the government has invested 300 million rupees in the eastern province to create a new program. Following Monday's negative trend, the market suffered a fall on the third trading day of the week. This downward trend was seen in both the ASPI and S&P SL20. And strong corporate profits helped provide additional support, and investors were hopeful for a trade settlement between the US and China as Wall Street closed higher.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. Sri Lanka's banking sector saw a significant increase in deposits, reaching 12.3 trillion rupees by the end of 2024, up from 10.4 trillion rupees in 2023. This growth of approximately 2 trillion aligns with the private sector credit flows, according to the Central Bank of Sri Lanka's Market Operation Report.
Sri Lanka's banking sector saw significant growth in rupee deposit liabilities, reaching 12.3 trillion rupees by the end of last year, a substantial increase by 10.4 trillion rupees in 2023. The rise in deposits was particularly driven by state and domestic private banks, aligned with the growth in private sector credit flows, supported by a low interest rate environment. The central bank noted that growth rate of rupee deposits, which stood at 10.54% at the end of 2023, surged to 18.43% by the end of last year. Credit to the private sector expanded by 790 billion rupees in 2024, with 359.4 billion rupees of that occurring in the final quarter. The last quarter also saw a significant 193.2 billion rupees expansion in private credit in December alone. Of the total rupee deposits, times and saving deposits amounted to 11.4 trillion rupees, while demand deposits stood at 815 billion rupees. Additionally, the currency to total deposits ratio decreased to 0.48 in 2024 from 0.64 in 2023, reflecting a shift in banking sector's dynamics.
The U.S. Secretary of State congratulated Sri Lanka on its 77th Independence Day, marking the significant milestone for the island nation. In his statement, he praised a strong and mutually beneficial partnership between U.S. and Sri Lanka, emphasizing shared democratic values and people-to-people ties. He expressed the hope for increased trade and investment in the coming year, as well as enhanced security cooperation to strengthen stability and prosperity in the Indo-Pacific region. The U.S. ambassador to Sri Lanka also joined in on the celebrations, reaffirming the United States' commitment to the partnership. She highlighted the importance of addressing shared challenges and promoting a free and secure Indo-Pacific. The statements reflect the ongoing collaboration between the two nations in various sectors. The government has launched a new program in the eastern province, investing 300 million rupees as part of a national initiative aimed at nurturing 15,000 new entrepreneurs.
The government has launched a 300 million rupees initiative in the eastern province to support the development of micro and small enterprises. Inaugurated by the Minister of Industry and Entrepreneurs Development Sunil Handunhetti, the program aims to nurture 15,000 new entrepreneurs nationwide. The initiative, which targets creating one entrepreneur in each of the 14,022 Grama Seva Niladhari divisions, focuses on empowering women and youth in sectors such as fishing, agriculture and animal husbandry. It provides essential resources, training and access to the market opportunities, ensuring entrepreneurs are equipped with global competition. The project will initially cover 150 Grama Seva Niladhari divisions in the eastern province. Minister Handunhetti emphasized the government's commitment to supporting entrepreneurs at every stage, from production to export. This initiative comes at a critical time when Sri Lanka's entrepreneurs, especially in the MSME sector, face a significant challenge, including debt, limited access to capital and complex regulations.
Sri Lanka and the UAE are set to sign a bilateral agreement on reciprocal promotion and protection of investments to enhance economic relations and encourage business internationalization. Delegations from both countries recently met in Colombo to discuss and finalize the terms of the agreement. The Sri Lankan delegation was led by Deputy Legal Advisor Tilani Silva, while the UAE delegation was headed by Dr. Hamid Nasser Abdul-Alkir, an economic expert from the UAE Ministry of Finance. The discussions were described as cooperative and constructive, with both sides agreeing on the text of the proposed treaty. The ARPPI aims to protect investments and create a stable environment for investors, addressing potential political and legal uncertainties. This agreement is expected to boost investor confidence in both markets and facilitate the growth of international investments. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The market saw a decline on the third trading day of the week, continuing the downward trend from Monday. Both the ASPI and S&P SL20 mirrored this negative movement. For further insights, we speak with Anjali Matthews from First Capital Holdings.
Today, the Colombo Stock Exchange experienced another day of negative sentiment, closing in red for the second consecutive day, with the all-share price index closing at 16,456, losing 500 points and marking a 2.95% decrease from the previous day. So the top contributors towards the negative index were HNB, Commercial Bank, Melster Corp, Sampath Bank and NDB. And so in a similar trend, the S&P SL20 index also closed in red, losing 176 points to close at 4,890, with a 3.47% decrease from the previous day. Investor sentiment also remained low, with limited participation from the banking sector. So amidst the dull sentiment, turnover recorded at Rs 6.4 billion, where the insurance sector dominated turnover, accounting for 22% of overall turnover, while the capital goods and food, beverage and tobacco sectors also jointly contributed to 35% of overall turnover. So the top gainers of the day include Selinco Holdings, Mercantile Shipping Company, John Keel's PLC, Navaloka Hospitals and Exterminators PLC. While the top losers of the day were Industrial Asphalts PLC, the Colombo Fort Land and Building PLC, UB Finance and SMB Finance.
Sri Lanka successfully sold 180 billion rupees in treasury bills, with yields declining across all maturities. The State Debt Office reported that all offered 30 billion rupees of 3-month bills were sold at 7.79%, down 14 basis points. For further insights on this, we speak with Akna Tennakon from First Capital Holdings.
Thank you. In today's treasury bill auction at the primary market, weighted average yields registered a marginal dip. The weighted average yield for the 3-month bill stood at 7.79% and recorded a drop of 14 basis points compared to the previous auction. The yield for the 6-month bill stood at 8%, while that of the 12-month bill stood at 8.43%. The drop seen in the yields of the 6 and 12-month bills remained below 10 basis points. So, in terms of the volumes that were offered, the central bank offered a total of 180 billion rupees worth treasury bills, and this amount was fully subscribed. For this week ending on the 7th of February, CBSL has roughly about 172.5 billion rupees worth of T-bill match. So it is also worthwhile to mention that the total bids received exceeded the total offered amount by about 2.2 times. The central bank accepted 30 billion rupees in 3-month bills and 60 billion rupees in 6-month bills, and 90 billion rupees in 12-month bills, sticking to the initially intended maturity structure. So when it comes to the secondary market, the last trading session ahead of today's T-bill auction saw limited activity and also some selling pressure.
Gold prices surged to a record high today, driven by concerns over a potential trade war between the United States and China. Beijing imposed tariffs on U.S. imports in retaliation to new U.S. duties on Chinese goods, fueling fears of escalating tensions. Spot gold rose 0.5% to $2,855.32 per ounce, reaching an earlier session high of $2,858.12. U.S. gold futures also gained, rising 0.3% to $2,884.60. The ongoing trade disputes have significantly impacted market sentiment, further boosting gold's appeal as a safe haven asset. Investors are flocking to gold as a hedge against global economic uncertainty. The precious metals rise reflects growing concerns about the stability of the global economy amid trade tensions. Oil prices fell today due to rising U.S. stockpiles and concerns over a potential new Sino-U.S. trade war, which overshadowed President Trump's renewed efforts to eliminate Iranian crude exports. Brent crude futures dropped 0.51% to $75.85 a barrel, while U.S. West Texas Intermediate crude lost 0.36% to $72.44. The market saw significant volatility yesterday, with WTI falling by 3% at one point, its lowest since December 31st, after China announced tariffs on U.S. oil, liquefied natural gas and coal imports in response to U.S. tariffs on Chinese goods. However, prices rebounded after President Trump reactivated his maximum pressure campaign to curb Iran's nuclear program, which had previously reduced Iranian crude exports to zero. The Sri Lankan rupee has weakened against the US dollar in commercial banks today, showing a decline compared to Monday's rates. According to Commercial Bank, the buying rate for the US dollar has risen, while the selling rate has also experienced an increase. Let's now take a closer look at how the Sri Lankan rupee is faring against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. United Petroleum Lanka Limited, the local subsidiary of the Australian energy giant, is making headlines for all the wrong reasons as it prepares to exit the market in less than a year after a high-profile debut.
United Petroleum has announced layoffs and the termination of employee contracts, signalling its imminent exit from Sri Lanka. The company cited unforeseen circumstances beyond its control as the reason for the move, leading the restructuring efforts that have made several positions redundant. CEO Nigel Simmons confirmed layoffs in a letter to employees, acknowledging the difficulty of the decision while expressing gratitude for their contributions. Employees were instructed to return company assets by their last working day, indicating the company's plans to shut down operations. The announcement has triggered unrest among workers, with some considering legal action against perceived abrupt dismissals. This marks a dramatic retreat from United Petroleum's first international venture in Sri Lanka. The layoffs are expected to take effect from early next month.
NDB Investment Bank Limited has announced the appointment of Harshana Jayavira as its new Chief Executive Officer. With over 25 years of global experience, Harshana brings a wealth of expertise in corporate and investment banking, wealth management and financial strategy. He has held leadership roles in prominent financial institutions across Switzerland, the Middle East and Sri Lanka, including Credit Suisse, ADDS Group and Acuity Partners before joining NDB Investment Bank. Harshana was a director at Grip Limited and played a key role with Alchemy Investments Acquisition Corp., a Nasdaq-listed special-purpose acquisition company. His career also includes key positions at Bank ABC, BNP Paribas and Nations Trust Bank. Harshana's diverse experience positions him well to lead NDB Investment Bank in its next phase of growth and development. John Keells Holdings plc has reported steady growth in the third quarter of the financial year 2024-2025, driven by the continued momentum of its flagship Cinnamon Life project and the successful progression of key infrastructure investments.
John Keells Holdings plc reported a 4% increase in Group EBITDA for the third quarter of 2024-2025, reaching 14.28 billion rupees despite pre-opening costs for the Cinnamon Life project. Adjusted for one-off factors, EBITDA rose 10% to 14.89 billion rupees. The Cinnamon Life project, which includes 687 key hotel restaurants and banquet spaces, officially began operations in October 2024, with all facilities now fully functional. Demand for event spaces has exceeded expectations, while interest in its residential and office towers has been increasing. The gaming space and retail mall at Cinnamon Life are set to open by the third quarter of 2025. The West Container Terminal's first phase is nearing completion, with operations operations expected to begin in February 2025. Despite challenges in the leisure sector, John Gill Supermarket business saw a 14% rise in same-store sales, while Nations Trust Bank and Union Assurance delivered strong profits.
The Commercial Bank of Ceylon has integrated its CommBank digital platform with the Colombo Stock Exchange's central depository system, enabling direct IPO settlements for account holders. This new feature, made possible through the Lanka Pay government payment platform, allows customers to pay for IPO shares via the bank's online banking channels. Commercial Bank's Assistant General Manager for Digital Banking, Pradeep Bandhuansa, highlighted that this addition enhances the platform's versatility and encourages share ownership among the public. Lanka Pay's Deputy CEO, Dinuka Pereira, expressed excitement about partnering with the bank to support online payments to the CSE and move towards a cashless society. CommBank Digital, which processes over 5 million transactions per month, continues to lead Sri Lanka's digital banking transformation. The platform now serves both retail and corporate clients, processing an average of 400 billion rupees in transactions monthly. Hilton Sri Lanka invites couples to celebrate Valentine's with a photo contest from the 5th to the 16th of February, offering weekend stays at Hilton Yala, Doubletree Weerawilla and Hilton Colombo as prizes.
Hilton Sri Lanka is offering exclusive packages for couples this Valentine's season, promising unforgettable romantic experiences at its properties. Hilton Colombo has planned an exciting photo contest from today to the 16th of February, with winners receiving weekend stays at Hilton Yala Resort, Doubletree by Hilton Weerawilla and Hilton Colombo. On the 14th of February, the Lotus Lawn will host a luxurious Valentine's dinner, complete with a 5-course gourmet meal, champagne private butler service, and live entertainment by the Gustav Mahler Orchestra. Grazed Kitchen offers a romantic breakfast, lunch and dinner buffet with themed mocktails and cocktails, alongside a special gift for the first 100 ladies who make an online dinner reservation. LAB will feature a Valentine's high tea with live entertainment by Switch. Sunset Blue will host couples contests and offer 1-for-1 cocktails from the 14th to the 15th of February, accompanied by live music from Cold Sweat and OIC. Hilton Sri Lanka is set to create lasting memories for couples looking to celebrate in grandeur this Valentine's season.
Hales Solar, the renewable energy arm of Hales Fentons Limited, successfully completed Sri Lanka's first ever solar roadshow, Gamin Gamata Solar Samata. In the southern region, the roadshow provided an opportunity for local families to engage with Hales Solar expert team and learn about the benefits of solar power for homes and businesses. Mobile units travelled across the province, showcasing a variety of solar products and services available to the public. In addition to educational efforts, Hales Solar offered attendees a chance to win a 5-kilowatt solar system through a prize draw. Exclusive discounts on solar products and other giveaways were also provided to participants. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks showed mixed performance today as Chinese shares dipped amid rising US-China trade tensions, while stronger than expected inflation data from South Korea and the Philippines caught investor attention. US stock index futures also saw declines in Asian trade, with technology stocks underperforming following disappointing earnings from Alphabet, the parent company of Google. The Shanghai Composite in China fell 0.4% and the Shanghai Shenzhen CSI 300 index lost 0.3%, while Hong Kong's Hang Seng index dropped 1%. In contrast, Japan's Nikkei 225 and Topix remained largely unchanged, and Australia's S&P ASX 200 index gained 0.6%. Indonesia's Jakarta Stock Exchange Composite Index decreased by 0.5%, and Indian Nifty 50 futures indicated a slight drop at market open. Wall Street closed higher, with investors optimistic for a trade breakthrough between the US and China, while strong corporate earnings helped provide more support.
The three major U.S. stock indexes closed higher on Tuesday, aided by energy stocks, while investors saw reason for optimism for a trade breakthrough between the U.S. and China after President Donald Trump delayed tariffs for Canada and Mexico. The Dow added 0.3%, while the S&P 500 gained 0.7, and the Nasdaq rose 1.3%. Trump had said over the weekend he would impose a 25% tariff on goods from Mexico and Canada, but agreed to a 30-day pause on Monday in return for border and crime concessions from both countries. Melissa Brown, Managing Director of Investment Decision Research at SimCorp, says investors are getting a break today, but should expect more market turbulence. In the meantime, strong corporate earnings are helping to provide more support to investors. Of the 211 companies in the S&P 500 that have reported earnings for the fourth quarter, nearly 80% have come in above analysts' expectations, according to an S&P earnings scorecard. Though after the closing bell, Google parent Alphabet posted quarterly revenue that missed estimates and said its capital expenditures connected to artificial intelligence would be about 30% higher than analysts predicted. Shares, which had closed up 2.5%, fell 8% in extended trading following the results. Shares of data analytics company Palantir fared much better, jumping 24% during the trading session after it forecast first quarter and annual revenue above Wall Street estimates.
PepsiCo forecast annual profit below expectations and missed quarterly revenue estimates as the Doritos maker battles weakening demand for its sodas and snacks in the United States, its largest market.
Shares of PepsiCo fell 4% Tuesday morning after it forecast annual profit below expectations and missed quarterly revenue estimates. The Doritos maker is battling weakening demand for its sodas and snacks, such as Lay's potato chips in the United States, its largest market. Americans are still paring back spending on soft drinks and salty treats to save their dollars for essential purchases, forcing PepsiCo to tap promotions for volume growth, after price hikes led to a slowdown for several quarters. The company plans to offer multi-packs and mini canisters to bring back consumers leaning towards smaller pack sizes or cheaper alternatives from retail aisles. PepsiCo also promised it would spend heavily to overhaul existing products and introduce new items, such as ethnic-inspired chip flavors, to spur demand. One analyst told Reuters the Frito-Lay business is still finding its footing as elevated prices weigh on snacking trends, and the beverage business also continues to lose share.
That's all from us here at the Nightly Business Report for today. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.